Mr. Chokkalingam, you gave your view on the defense counters in the start of the show, and we have a lot of our viewers who are writing to us stating that they are sitting with hefty profits. Luckily, in the defense pack, we have Renuka from Kerala who has 50% profit in Cochin Shipyard as well as in HAL. What's your take now for all these defense counters, be it Cochin Shipyard, HAL, BEML, which has hit a record high level as well today? What should one do? Book out profits right now?
I'll take only 1 minute extra. After seeing this market closely for 33 years, I have been all through my life focused only on small and mid cap. But honestly, person like me has become a joker in the last 2 months. So if you take my view seriously, you might lose further momentum. According to me, there is no valuation comfort in any of these stocks. But again, I want to say that I might continue to go wrong. But one thing you have to decide what kind of profit you are making. Accordingly, one should sell in at least in phases, because today's market cap is 448 lakh crore. Again, I'm telling you that even in 1% of that selling comes up for selling, our market doesn't have appetite to absorb without eroding the small and mid cap space in a big way. That's what happened consistently in the last 30 years. So finally, my comment is that try to take profit, if not in one shot, at least phase it out and try to take profit and convert into some fixed deposits or buy some own house.
Alright, so that's the fundamental view coming in from Mr. Chokkalingam, being very candid about, given the fact that he has about 3 decades of experience in the markets. Kunal, if you look at these defense counters, the valuations look stretched. Look at the relentless rally that all of these counters have seen, right, over the last 1.5 years or so. What's your take on the technicals? What's your view coming in on all of these defense plays, which actually our viewers hopefully are making really good profits?
See, I would believe that, I think most of the points which, Mr. Chokkalingam mentioned, I think is true to the fact. But there are 2 factors which I typically look out for. If there is a fundamental story which is attached towards a certain sector or a stock specific. And then the second and the most important part is what we look out for is, sticking to the more formidable names into each of the sector. Now, to give an example, Bajaj Finance in 2009 was a stock which at adjusted value was almost at 5 rupees or 6 rupees. In a matter of 4 years, the stock went to 30x, almost 150 mark. So it may have looked a lot more overbought at that point of time. But remember, from 2013, if your time horizon was another 10 years, then the stock has multiplied by another 50 times. So it all depends on the kind of quality which you are looking out for. I would not paint all the stocks with the same brush, but if you're sticking to quality, even if it's a defensive pack, then I would, and with a long-term time horizon, then I think money should be made for long-term investors.